speaking of chaos, after almost 2 weeks of U.S.-led bombing of Muammar Gaddafi's forces in Libya, oil prices have climbed 26%. Now, our next guest says any hope of a quick resolution in Libya is a pipe dream and warns investors the markets haven't yet priced in the implications. Helima Croft is a senior geopolitical strategist at Barclays Capital. She covers the economics and politics of key commodity-producing countries in Africa, the Middle East, and Latin America. She was also once employed by the CIA, which I found fascinating, and she joins us now from her firm in New York. Helima, such a pleasure to have you as a guest on the show. Thanks so much for joining us. Let's talk about, you did use that term pipe dream in describing what is going on in the Middle East and any reconciliation sometime soon. Why is that?
Well, I think there was a view in the markets a couple days ago that the rebels were somehow going to march on Tripoli, everything would be resolved, and we'd restore instantly 1.3 million barrels of Libyan exports. And the problem is that we don't know these rebels. They don't seem to be able to move outside the east without substantial NATO air support. And so I think we're looking at a much more protracted political struggle in Libya that could lead to their exports being suspended for well over a year.
And let's go from Libya to the neighboring countries. Of course, everyone is worried about what will happen in Saudi Arabia. Clearly, the government there has a lot more money at its disposal and has taken some steps to sort of keep the population, at least from doing anything particularly violent. But how tenuous is the situation there at the moment?
I mean, certainly Saudi Arabia has many of the same demographic issues that we see in Egypt and Tunisia. 65% of the population under the age of 30, very high youth unemployment. Some people say it's around 40%, but the government does have money. They've spent over $100 billion on new social programs, unemployment programs, housing, but there is an issue of a democracy deficit there. They have not made huge political reforms. So the question is, long term, is it a winning strategy just to buy off your population? Will you at some point have to offer them something more than just money?
Let's talk about how the oil market is pricing the unrest throughout the region into prices. We have seen prices rise quite a bit. Do you think we've barely sort of scratched the surface on where oil prices could go?
Well, I think there are a couple issues to watch right now. Is there another supply disruption that is looming? We're very closely watching what is happening in Nigeria with the upcoming elections. They're set for April 9. In the past, we've seen big outages of Nigeria, over 1 million barrels of production offline during the election season because of election violence in the oil region. We're concerned that you could see something similar happen this time, and the market really is not in a good place to absorb another big outage. So I think it's important to watch Nigeria. But long term, if you have the Libyan production out of the market for a sustained period, that really does eat into your spare capacity margins, leading to more volatility in oil prices.
Helima, what else? You just talked about the elections in Nigeria. What other events are you watching very closely? I know you think that people are overlooking Bahrain and the potential impact of what is happening there on oil markets as well.
Yeah, I mean, we look at Bahrain as a place where you have the Saudis and the Iranians really sort of butting heads. And our concern is, where do we see this sort of next sort of zone of conflict between the Saudis and the Iranians? And I'm very concerned that we could see new violence in Iraq, which has been a traditional hotspot for these countries. And the U.S. is pulling all troops out of Iraq by the end of this year. And Iraqi production is absolutely essential for the medium-term oil price market. I mean, you have a situation where the Iraqis are hoping to add 6 to 7 million barrels of production. And if we have political violence in Iraq inspired by outside actors, those plans will be put on hold. And so I think it's very important to watch Iraq going forward, because no one can potentially add as much spare capacity to the market as the Iraqis.
Where does the U.S. stand in all of this? And when, if we're pulling troops out of Iraq, at what point do we reverse course? What price does oil have to hit for our government to say we need a much more aggressive policy?
I think the problem in Iraq right now is someone like Prime Minister Maliki probably would like the Americans to keep their troops there. I think there are people in the Pentagon who would like to keep some residual U.S. troops there because they're concerned about situations, for example, around Kirkuk. But Prime Minister Maliki has partnered up with Muqtada al-Sadr, and as you can remember, he's the radical anti-American Shiite cleric who really does not want American troops there. So Maliki, I don't think, has the room to maneuver to ask for U.S. troops to remain in place. So I think we're basically done by December 31, 2011.
And you don't think oil prices hitting a certain point will get us to intervene more aggressively anytime in the near future?
Well, one problem is with the Libyan operation, even though we don't have ground troops there, we are basically providing air support, and we're also maybe going to be involved in arming rebels and having to supply trainers. So we're going to be involved in some way in Libya. We're already tied down with 100,000 U.S. troops in Afghanistan. I'm not sure we have the additional assets in terms of the intelligence community, in terms of U.S. troops, to be remaining in places like Iraq or doing other potential conflicts like Syria or Yemen if we're called on.
All right, Halima, thank you so much for the insight. Pleasure to have you on this show. That was Halima Croft of Barclays Capital. She's a geopolitical strategist with the latest on what is happening in the Middle East and North Africa.